Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello and welcome to today's podcast. Thank you once again for joining in. I am enjoying all the feedback I am getting from everybody listening, and it's awesome when people say, "Oh, I binged on your podcast last weekend," or "I just found it and it's awesome and it's so informative," and keep them coming. I love it. I love it. All the naysayers aren't listening. So that's a good thing for me because all the feedback is good and it makes me feel wonderful. If you have other feedback as well, I appreciate it. You know, if you guys have certain questions or things that you want me to cover on here, send me a message, maryjo@withoutthebank.com, and I am happy to bring those topics up. I know some things I'm going to end up starting to repeat, but that's okay. If you probably missed it in one of the first episodes, we're going to hear it again. It's all good. It's all good. Today, I am going to be talking about how do we get started and owner financing and maybe buying from an owner and just a couple strategies to think about if you're selling or if you have a seller, if you're the buyer and you have a seller that wants you to go to the bank. So definitely some things to consider for sure. Before I get too far into it, if you are in or around the Brookings, South Dakota area or Cedar Rapids, Iowa area, I will be there March 23rd in Brookings, South Dakota, and March 24th in Cedar Rapids, Iowa. By the time you hear this, South Dakota is filling up super fast, so check and see if we still have room for you. Cedar Rapids, Iowa is not as quickly filling up, but there is still room. So get your tickets if you can. All right, let's get started. What do we do? I get this question so often. I can't get started, Mary Jo, or I can't afford that payment, or the bank's not going to lend me $2 million to buy ground, or the banks aren't going to lend me $1 million or $3 million or whatever it is that you need. And my big go-to here is owner financing. Why don't we owner finance when we're selling ground? Why don't we consider asking the seller to owner finance? And so if you're a buyer, I'm just going to talk to you if you are the owner, I am going to just talk to you for 1 second. You are wanting to quit, you're wanting to slow down. I don't care if you're selling it to a kid, if you're selling it to a neighbor, if you're selling it to Joe Schmo that you don't know. It ultimately doesn't matter. If you have a $2 million piece of ground and you want to sell that today, you're going to sell $2 million. And let's just say I'm buying that from you. I'm going to go to the bank. I'm going to get a loan for $2 million. I'm going to finance that at around 5% today for the next 30 years, let's say. Okay, I'm going to pay the bank $2 million. I'm going to give an interest over the next 30 years. I'm going to give you $2 million of cash today. You get to take your $2 million and pay capital gains on it. So you don't end up with $2 million. You end up with the $2 million minus whatever your capital gains are. And then you get all that income at one time. What if you would do a contract for deed and you would say, you know what, I'm going to owner finance you. So Mary Jo, you can pay me over the next 30 years. And now I have income for the next 30 years, guaranteed income that you're going to make your payment. Well, what if you're 70? You're like, I'm not going to be here in 30 years. Okay, then maybe you owner finance me for 20 years. But guess who gets that interest? If it's $2 million over 30 years, you get that interest. You get the $2 million of interest that you were either going to give up to the bank because you didn't want to go do a contract for deed. So why not do the contract for deed, spend a few $1,000s? If I default on my payment, guess what? You've got a farm to sell again. It's a win-win for you. Yes, you're going to have to find someone to sell it. Yes, this was your income. There's a tiny bit of risk there. Okay, in my opinion, that's a tiny bit of risk because you get a payment for 30 years that was going to be much larger, and your capital gains is only going to be a portion of that payment because guess what? The majority of it right away is interest. So the capital gains is minor. It's going to help you on taxes because if you're selling out or you're slowing down, you don't have as many write-offs because you probably turned it all over to the kid. And guess what? You don't have the inputs. You don't have the crop insurance. You don't have the operating expenses anymore because now somebody else has that stuff because you're done. But you do have income every year that you know can supplement retirement. And with a contract for deed, you most likely kept it out of the nursing home's hands because it is for sale. Now, I don't know the exact rules of that. That is something you need to talk to an elder law attorney about. Is that contract for deed? What happens if it's not in the 7-year window? Yada, yada, yada. Okay? But those things all need to be considered. But what if you're only going to be here for another 20 years because you're 70 or you're 75 years old and you're like, I'm not going to be here 30 years. Okay, maybe whoever you're selling it to can only afford a 30-year amortized payment. And if you pass away in 20 years, now they continue to pay your estate for 10. That's all put in the contract. Maybe you do a 30-year amortization payment, but in 15 years, there's a balloon. And in 15 years, we think about, do we redo the loan? Do we continue on the way it is? What happens with the loan? But it gives the person buying some time to create some cash flow to get started with all those operating costs. Do we just sell a portion of it over time? Or heck, do we put it in an LLC and give the new owner a different percentage or a more percentage of the LLC every year until it transitions over? Again, that's not going to be super protected from the nursing home because if you're an LLC, your portion of the LLC goes to the nursing home, from what I've been told. Okay, I'm not an attorney. I'm not an accountant. Verify all this stuff with your accountant. I have talked to accountants and I've talked to attorneys, and that's where I've gotten this information. But there are many, many ways to do a ownership sale versus just saying you have to go to the bank and you give the bank all this interest because I don't want to take that risk. In the 80s, people were doing for sale by owners. I know one firsthand, did a for sale by owner, and the guy sold it twice because he had 2 owners default on it. And so, he actually sold it 3 times. He had 2 default and then sold it a 3rd time. So he had money and he was getting payments and then he got to resell it again. And I'm sure every time he resold it, the value of the land went up a little bit. Or let's hope it went up a little bit, right? So think about those things to make it maybe a little bit easier for the kids to take over. Or do we want to do some mentoring with people that aren't family members that want to get into farming? How can we make it possible for them to do that and still be able to afford it? Well, a lot of them need a 30-year payment. A 30-year amortized payment. That's what they need. They can't go higher than 30. I mean, FSA in most cases is doing a 40-year loan. And so a lot of times that loan is what they need it to be. But that doesn't mean we can't put in the contract that you then have to continue to pay out my estate. And a lot of times if you're selling, it's a good thing to say, okay, we're going to reevaluate this in 15 years. Because inflation is going to take away some of your payment. So if you're living on $100,000 today, in 15 years with inflation, $100,000 isn't going to be enough to live. So you might need to say, you know what? We can't continue a 30-year mortgage payment. We're going to have to increase that, and we're going to have to refinance that maybe over another 10 years or another 8 years, whatever it is, to get that payment to where it needs to be for you to continue to live. But it still has to be something that the person buying can afford. And you don't have to take that risk, but it's an option. And I get messages, a lot of messages, just in email, Facebook, phone calls, whatever. How do I get started, Mary Jo? What are some options besides just going to the bank? Owner financing is a great option if the owner is open to it. Having an investor come in. I was talking with somebody on Facebook, messaging back and forth, and said, you can have an investor to start. Well, she didn't want to be controlled by an investor. Well, you don't have to be controlled by the investor. You can have in your terms that after so many years, I'm going to buy you out. After 5 or 10 years, I'm going to buy you out. We really need to think creatively in order to figure out how are we going to get started, or how are we going to sell to alleviate capital gains? How are we going to sell so we can make a little more? I mean, think about if we did owner financing on a $2 million piece of ground and we had $2 million of interest. Our estate just increased by $2 million. Could we leave a little bit extra to the kids? Do we have a little bit extra to live comfortably knowing that these are going to be the payments that I'm going to get every single year? Yes, that's way better than saying, here you go. Here's all the money. And as long as we're protecting it from the nursing home or it's in a trust or wherever it's at, those are all good things to think about. Because if we have extra income coming in, do we then have money that we can buy a policy, a life insurance policy, and put some of that income in there and leave that as an inheritance to the kids? If I'm doing a contract for deed, I may have insurable interest on the owner of the contract for deed. So upon their death, I then have the death benefit to pay off my loan to their heirs or to the rest of the heirs if I'm a family member. I now say, okay, upon dad's death, I have the death benefit. I can buy out the rest of the estate, or I can give the estate a big down payment, whatever that's going to be. And if I'm the one selling, I also have insurable interest in the buyer, because what happens if those terms aren't fulfilled and that person passes away? How does that financially affect me? So we have some key man opportunities to be buying insurance on one another as well, and protecting what we've made payments to or we've received payments from. Because there's always a family on the other side or a spouse on the other side that they might not want to continue making payments on land if their husband was the one farming and they don't have anything to do with it, or vice versa. So definitely some things to think about, definitely different ways to start and get into this business of farming, because it is a business, remember. There are things that we can do differently than what everybody is doing. What I don't understand is, why are we giving so much interest up to the banks when we sell? Or we're not selling because we're so scared of capital gains, when in fact we could do a contract for deed and capital gains might not be such a huge issue. And we're going to talk about this further because I am going to have an accountant on as a guest. And I really want to kind of get this pinned down because so many people think, well, I'm not going to have money to live if I sell. I'm not going to have the income I need because I need to be farming. Do you need to be farming? What are you making as income farming? Because if you sell a $2 million piece of ground and your payment is $130,000 a year, is that doable for you? Is that what you're making now? Guaranteed. Rain, hail, snow, whatever. You're making $130,000 because that's a payment to you. So is there a better option? And what does that look like on the tax side? Because we're holding on to ground to avoid capital gains. And the only reason we're concerned about capital gains is because we're selling it all at once. And we don't need to be selling it all at once. Sell it over time. Nobody says you just have to stop farming all in one day. Nobody says that you have to have the new owner go to the bank. And nowhere is that written in stone. That's just a thought process we've gotten because the banks are the ones behind there sitting at their desk saying, hey, okay, this is how we're going to do this. Really? That's how we're going to do this? That's how you want us to do it because you guys want to make the $2 million in interest. Yes, they take risk for that $2 million. Absolutely all day long. But guess what? If I don't pay you and I bought land from you, could it not just go right back into your estate? Could you not hire somebody to custom farm it? I mean, at the end of the day, there are a lot of options for you. We just need to look at those options and think a little bit differently about what we're doing. Okay, that's it. That's all I got for you today. I hope that helped you think a little differently, little outside of that box that we've all created. As always, if you have questions, concerns, or comments, maryjo@withoutthebank.com. I will try to get to them and answer them there. If you have ideas for what you want me to cover, please let me know and email me that as well. Otherwise, you can always find me on Facebook, LinkedIn, even YouTube. You guys, all my podcasts are on YouTube as well. And so if you're a YouTuber, go to Mary Jo Irmen and just follow me on there. I would very much appreciate that as well. We're going to be putting a lot of other things on YouTube besides just the podcasts, but you can follow me there as well. And again, I will be in Brookings, South Dakota, March 23rd, Cedar Rapids, Iowa on the 24th. You can go to farmingwithoutthebank.com and get your tickets there. Okay. You guys have a fantastic day, and we'll talk to you in a week.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.